Okay, great. So this is the second part of chapter 2, and this is payroll, right? Payroll. So now a couple of things that you need to be happy with payroll. First of all, payroll is not a cash transaction. It doesn't happen at the end of the month where someone just wakes up and just goes, oh, debit wages and credit bank. No, if you think about it, I mean, your business has to prepare and make sure that all the adjustments are through, everything is happy, everything is they're sure they've put through all the adjustments, any overtime, blah blah blah, change in tax codes, whatever it is. So this really is a journal that happens probably a week before payment, because if the information still needs to feed through the bank, through the BACS system, or the bank automated sort of transmission systems, and think about the millions of transactions happening. So that's the first thing you need to think about. The next thing you need to understand clearly is that your wage is not the only cost to the business. So the definition of wage for a business is not just your gross wage. So wage expense for any business is made up of your gross wage, and I'll talk about what that's made up of in a second. The employer has a responsibility to pay national insurance on your behalf. So in this country, in the UK, businesses have to pay national insurance as well, towards, if you like, the healthcare of their employees as well, and towards looking after them. So you have that. And also, most businesses have a duty of pension care, long-term care. So most employers have to also pay an employer pension contribution towards their employees. So these are the three main components of a wage expense, right? So just the week before, these are the three things they're going to be adding together. Now, the gross wage is made up typically of usually three issues. There might be more. Your net wages, that's what you're going to get. Your PAYE, that's your income tax, and your national employees' national insurance. So, I mean, that kind of makes sense, right? You have your gross wage, it gets taxed, NI gets taken off, and then you get your net wage. Sometimes you will have other deductions, like you might be paying an employee pension fund, pension contribution as well. But all of these four things add up to make up your gross wage, right? So now the rest of this really is logic, because as you can imagine, fundamentally all you are going to get in the bank is this. You're never going to see this. This, your business, your company collects from your wage to send off to HMRC. So they take this off your wage, take this off your wage, and we'll send this, of course, as well as this employer's, this as well. And then the pension contributions, they'll send off to the fund managers who are responsible for investing this money. So let's do it. So fundamentally, therefore, because wages are an expense, right? A is equal to E. Sorry, A plus E is equal to C plus L plus I. And we have D over here. So what do we have? We have the wages expense, this full wage expense that I was talking about, right? And we have, like I said to you, it's not done automatically on the last day of the week. It's done, if you like, a week before, and this is referred to as, if you like, a wages control account. I mean, it's a liability account. It usually is a liability account. It's right the other way. So what do we have? All those three things I talked about: your gross wage, your the employer's national insurance, employer, and the employer pension fund, pension contribution, sorry. Those three things, debit, and then we have the same three things here: gross wage, employer's NI, and employer's pension. Now I've done this, I can now transfer all of this to the income statement, no problem, and that's the wage. It's done. It's an expense to us. Fine. And then we're done. That's E. I can go and prepare my income statement. Now what happens next? This is now sitting nicely in the balance sheet, so to speak, under current liabilities, but we're going to clear this out by the end of the month. We have to. I'm trying to drag this down. Yes, here we are. So let's just go down a little. So I'm just gonna, I'm doing this is all theory, isn't it? You just have to go in and do the numbers. So here we have the wages control account. So that, sorry, we have the wages control account here, and then I have my bank account. So what's going to happen? So what's going to happen is we will take out from this your net wages and give you. So that will come out of our bank account and go into your bank account. Remember, we're looking at this from the perspective of the business. It's leaving the bank account of the business. So we must debit our liability to you and credit the bank. So we reduce that. So what does that mean? What's left in this liability account? Well, your PAYE and your national insurance and this national insurance is still here. So what do? We just create, if you like, a HMRC, so we clearly know who it's for. So we take those three out: PAYE, employee national insurance, employer national insurance. Take those three things out, 1, 2, 3, and we come there: PAYE, employer national insurance, employee national insurance. Those three things now nicely come over there as well. So this is a liability account. Typically, I believe it's 19 days. I always get this wrong if it's 22 or 19, but at least at some point after the year, you've been paid, then we will now, out of the bank, kind of pay these three things, kind of come out of our bank at least 19 days post the year end. And then the final thing that gets transferred out of this wages control must be these pension contributions. So we have, if you like, pension contributions liabilities. We have the the employee pension, if he had kept any pension, and the employer, because the employer is there. Take that out. We're just literally moving it out of here into here. So those are those two. And then, again, out of the bank to the respective fund holder to deal with. And then they'd invest the money on your behalf. Okay, great stuff. So please make sure you look at the textbook, look at the questions as we prep for revision. This is just, again, like a booster thing, just to give you the theory, quick theory through it again. Okay, great stuff.